Well, we love talking with you about our ag commodity markets, and here in studio this week we have Chris Swift, as Tim mentioned, standing by to visit with us about what's driving the market activity. Chris is with Swift Trading. He's based here in Nashville. Always good to have you on board.
Good morning. Glad to be here.
Yeah, good to see you. I hope you had a good weekend.
Yes, sir, indeed.
All right, let's take a look at our current trade. We'll start with the corn, and the corn market. Chris and I were just talking before we came on live here. I watched it. It sold off, rallied, sold off. Now we're starting to ease back up a little bit for the second time already, but we're still down 9 cents on the May contract. We're at $7.45 per bushel. You have the December new crop corn now 9 lower at $6.60 per bushel. That's 6 cents off of its overnight high. Let's look at our soybean trade right now. Here we go. In the May contract, 24 3/4 lower at 16.85 1/2. Look at where we had the high last night, 17.10. So we're off of that by 25 cents now. You have the November contract, 19 3/4 lower. We're now at 14.77 per bushel there. Let's move on to our wheat. We'll go to Chicago wheat first. And here you have the May contract, wow, down 47 3/4 at 10.54 1/2. And believe it or not, that's 7 cents off of its earlier low. July is currently down 45 cents on the day. In the Kansas City market, you have May down 41 1/4. We're at 10.69 1/2, and July down 39 3/4. So a big sell-off in our wheat complex here today. In Minneapolis, the May contract 35 3/4 lower at 10.68 1/2, and you have July down 35 cents right now as we speak. In the cotton trade, you have July down 96 points at 131.39. I believe it had been higher overnight. Look at that range on that thing. It had been as high as 137.99. And December cotton down 233 points now at 109.41 after hitting 114.15 last night. So big turnaround in the cotton market this morning. Well, Chris, let's talk about this. News that Shanghai is half shut down now. I mean, it's not a small village, is it?
No, it's really not. There's all kinds of things going on this week.
So that's kind of got the market spooked here. In fact, let me bring up the crude oil trade. Okay. And we were talking about this a little bit ago. That may be sending some shivers through the grain trade. May West Texas Intermediate crude down 7.70. I think when we checked a little bit ago, it was down about $8, but 106.21. Yikes. That's causing people to raise a few eyebrows out there. How much impact could that have here on the grain, like soy oil and corn?
You know, day in, day out, it impacts it just because it's the day. But when we look at it a little bit longer term, we know that we've got a really important planting intentions report coming up on Thursday, as well as grain stocks, and that will be much more significant to the grain market than just the oil. But even with oil down $7, $8 a barrel, we're still not seeing the grains down by all that much.
How much credence do you think the trade will put into that planning estimate, though? Because there's still time to change your mind based on what the price does.
There is, and it will be very skeptical. It will be met with skepticism at every angle, and if it comes out at 92 million acres, they'll look at the fertilizer issues and see if that's going to impact the yields or not. Right now, with beans at about 88 million acres, if that creeps up to 89 or 90 million acres and begins to rob some of that ground from corn, then it's all going to be pretty interesting, because if you look at the carry charges with the inverted carry, there's still significant demand out there. So if somebody is willing to pay the highest price up here up front right now, it doesn't matter because they've got to have it.
On the other hand, you have all this outside investor money that has been looking at commodities here. And if they're talking hiking interest rates, maybe 50 basis points several times coming up the next few months. Does that make commodities look even more attractive now?
Well, I have to believe so. And we've always discussed throughout my career of, you know, money coming out of equities into commodities. And I don't know that there's ever been real sound proof that says, yes, I took money out of my savings account or something and bought beans. But with the derivatives that are available now through ETFs, so many people can now participate in this without having to deal with the heavy margin requirements and futures and options.
Okay, well said. We'll come back in just a moment. Chris and I will take a look at our livestock trade post-cattle on feed report when we come back. Well, we're back with Chris Swift, and I want to get your take here, Chris, on that cattle on feed report. I know you're big into watching the cattle markets here. Were you taken aback by that high placement number?
Not really. We knew that the weather had not permitted the cattle to stay on wheat pasture for an extended period of time this year, and so I think that's what the reflection of that is. We saw a tremendous number of cattle pulled early off of the wheat pastures, and they had no place else to go but on feed.
What do you think that means longer term?
Well, we already knew that the cow herd had been turning backwards just a little bit, and we know that the drought had moved a lot of the cows and heifers out of the Montana, Wyoming, northwestern areas there. So we have to believe that there's fewer cattle, and now that we pull these particular cattle, which tended to be really good cattle coming off in March and would go on feed, they come off just a little bit early, and I think it just makes for a small amount shorter supply for the next couple of months.
Not much wheat to graze out there this year.
No, there really wasn't. And even pastures. Pastures are going to be inundated incredibly this year. Fertilizer, hay. I've already heard of people saying hay prices will be phenomenal this year. So there's a lot of aspects to the production side of it that even though we have fewer animals out there, may not necessarily be as bullish as what you think, because that also means some liquidation. We've got to, I just can't afford these, particular input costs to it. So we have to liquidate further, and maybe that balance keeps us more steady than it does really roaring higher or lower, either one.
And it is barbecue season.
It is fixing to get that way soon.
Oh, come on. We're already there in a lot of areas.
It was a little nippy grilling this weekend.
I like barbecuing in the snow. So, all right, let's take a look at our current prices. We'll go to live cattle here. We'll see how they're responding after the cattle on feed numbers came out, and they're a little weak in the knees. We have April down 27 cents. We're at 140.20 per hundredweight. June is down 82 cents, now down 80 at 136.57. So we'll call it 20 to 80 lower on the live cattle board. Let's switch over to the feeders and see what they're doing. All things considered, don't they seem to be holding up